It is a split session across global markets, and the divergence tells an important story. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for May 28th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.16, losing 0.18% on the session. The world's most traded currency pair is tracking ECB versus Fed rate expectations. Pound sterling to US dollar is trading at 1.34, losing 0.36% on the session. Sterling is sensitive to UK economic data and Bank of England commentary. US dollar to Japanese yen is trading at 159.44, gaining 0.12% on the session. The yen remains in focus as Bank of Japan policy normalization continues. USD SGD is trading at 0.7822, losing 0.13% on the session. The Singapore dollar reflects broader Asian FX sentiment and trade flows. Australian dollar to US dollar is trading at 0.7126, losing 0.63% on the session. The Aussie dollar tracks commodity prices and Chinese growth signals. US dollar to Chinese yuan is trading at 0.1475, gaining 0.09% on the session. The yuan reflects PBOC policy and US-China trade dynamics. Now let us look at the macro forces behind today's currency moves. Geopolitical risks remain elevated. Traders are reacting to news that severely oversold. Wall Street says a relief rally is coming for struggling stocks as the Iran war enters its second month, Business Insider. This is keeping traders cautious and supporting flows into defensive assets. The key macro overlay remains monetary policy. Equity markets are responding to reports that stocks slump as energy surge fuels inflation fears. Markets wrap. Any surprise in the rate path could trigger outsized moves. On the data front, investor sentiment is being shaped by why Nvidia's big earnings report couldn't revive the stock market rally after all. Business Insider. Currency markets are reacting to EU action to address the energy crisis. European Commission. Our near-term view on Australian dollar to US dollar. With Australian dollar to US dollar moving sideways today, the market is effectively waiting for a fresh catalyst. The $0.7304 level above and $0.6948 below are the levels to monitor for the next directional signal. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. If this breakdown was valuable, please share it with anyone who follows the markets. Subscribe and hit the bell so you never miss a market update. We read every comment. Drop your view below. That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor. Trade safe, and we will see you in the next one. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.